no set correlation in stone. It is going to vary from day to day. There are some general principles that I can share with you, and I always shy away from doing that because people tend to take them as gospel. Typically, volume leads price. But again, the word is typically. That is not a rule that's etched in concrete, or you can't take that to the market every day. Take a look at it for yourself and watch. This is one of the best ways to learn about that relationship. And don't jump the gun and think that you have it figured out. Aha, the volume is leading, so now I'm going to go long or go short. Wait, observe, look, and learn.
I would have to add that's why you'd want to use the footprint chart, but we're not talking about that today.
That's true. That is a very good point. That is a very good point.
Next question. What about longer term profiles, daily, weekly or monthly versus just the daily? Do you look at those at all?
Yes, absolutely. A lot of it depends on what time frame you want to trade and what time frame you are trading. The profile and the power of the profile works on any time frame, whether you want to be a swing trader or an intraday trader. So absolutely, you can use it in either time frame and in either context.
The chart you have up here, someone's referring to that. He says the MACD is diametrically opposite to the bullish decision at the open. How do you explain this, or is this something
I explain that very, very easily. Indicators are sort of nice to have, but I never base my trading decisions on indicators. There are sort of what I call, you have to look at a confluence of evidence. First of all, I took you to one of my most powerful analytical techniques, the profile, and we got our bias from the profile. In addition to that, at the same chart that we're looking at, you have another very, very powerful signal that's bullish, and that is, take a look at the moving averages. My 20 moving average, which is the blue line, is above the 50, and both of them are pointing up, and I have a very nice solid gap in between them. The other thing that you have to keep in mind about the MACD is it has been going through a period of consolidation, and during this consolidation, quite often we have a loss of momentum, and the MACD is a momentum indicator. So we did lose momentum, but that doesn't really tell us anything about a directional bias. And that's why you really never want to base your judgment or trading decision strictly on any one indicator. You want to take a look at the confluence of evidence that you see. I hope that helps you.
Yeah, I think that was good. There's a couple questions. Do you confirm your market profile charts with the footprint charts at all in your classes?
Yes. When I began the session today, I told you that the market profile, or the profile, is really a world unto its own, that there's so much to it, and that we couldn't conceivably apply all of the different methods and trading tools and concepts and techniques and so on. So what I wanted to do is really choose some very basic concepts and show how even with these simple and very basic concepts, we can use them to make money in the market. Now, there are different levels, and certainly if we take a look at some of the footprint charts and the power that they add to the picture that we have, we begin to open up a whole venue of other opportunities and sort of other analytical decisions that we can extract from that information. I always like to keep these brief presentations focused and limited to a few simple concepts, and I find that that helps a lot more people, because there are different levels of proficiency in terms of the profile, and the more we can show the simplicity, the more likely we are to attract people to the profile, rather than sort of confuse them with things that they're not familiar with yet.
In the calculation that you use to determine the average POC, I think you'd use 7 days. Is 7 days a number that you always use, or do you go based on what the consolidation period has been?
I chatted about that a little bit earlier, the 5 and the 7, and I specifically said don't look at them as sort of gospel or key numbers. The one thing I can easily tell you is, and the reason that I happen to have picked them for this particular analysis and this particular session is because of the period that I was looking at, which was the period before the FOMC meeting and so on. So that explains the number 7 and the 5. Now, having said that, the 5-day or the week is a very meaningful POC to look at. You want to look at your weekly POC and look at the following week where it opens relative to that. There's sort of a multi-level reasoning behind the argument, but once again, it's not always about just 5. It's not always just about 7. It is really about the context of what you're looking at and the period that you're looking at.
Okay, what profile formations should we look at on an intraday basis that might provide support resistance levels?
Okay. There are a number of key things that you want to be looking at, and if you're going to trade intraday and you have market delta, in addition to looking at the day's profile, you definitely want to be incorporating the footprint into your intraday trading. And if you're not, you're really missing one of the key or one of the most important elements of the power of the profile and the power of market delta specifically. So you really need to be looking at the footprint charts, and I always like to say you never want to be looking at just one thing. You want to be looking at a variety of different things so you can make the best judgment that you can. Now, in terms of support and resistance, there are